First, let us start with asset quality. The GNPA has come in at about almost 5%, 4.9, and plus you have, I think, restructured assets which amount to, which were about 9.2% higher, amounting to another 1.96%. So total looks like very close to 6%.
Yeah, if you recall, Lata, we were talking about from the moratorium book, we were talking about 17,000 crores was our moratorium book, about 1,700 crores, which I said is likely to become NPA over the next few quarters. We also talked about 1,200 crores is likely to get restructured. What I'm happy to tell you is that it is pretty much in line with what we had estimated. For this quarter, pro forma NPA is about 1,507 crores, which includes two big accounts where we are expecting recovery in one account in January itself, and another one is likely to get restructured. This amounts to about 535 crores. If you take that off from NPA level, it is about 1,507 minus this 535, it's close to about 1,000 crores. This also includes the 132 crores of pro forma NPA which we had at the end of September quarter. So if you actually look at Q3 and Q4 put together, our estimated NPA for Q4 and the pro forma NPA which we are declaring now is more or less in line with what we had estimated when I came on call after Q2. So it's pretty much in line with what we had estimated. As far as restructuring is concerned, it is slightly lower than what we had estimated. So in all, it is as per expected lines.
What is your view? Will the restructured assets swim ashore or can they decline to NPA?
Typically, we have seen about 25% of restructured assets becoming NPA. That's what we have seen historically. Having said that, one thing which I have done, which we have done this time is that whichever we are restructuring, we are very carefully looking at cash flows and the business model. So that's the reason why a little bit of what we thought as a restructured had become NPA in this quarter itself, because we are not restructuring just for the sake of it. So we believe that it shouldn't be really very high slippage from restructured into NPA. My expectation is about 20-25% of that is likely to become NPA if COVID situation prevails for longer time.
Okay, so 20 to 25% of restructured assets likely to become NPAs if this situation prevails. What about credit costs? What could they be in the last quarter of the fiscal? And are credit costs likely to be elevated over the next few quarters as well?
What we are expecting is next quarter, the estimate is about 550 crores is what we are estimating as likely NPA. And we are looking at restructuring of something like 850 crores. Restructuring, we haven't done much in this quarter. So the restructuring numbers which I spelled out by end of Q2 is likely to happen in Q4. So in all, we are expecting, when we look at estimate of credit cards, it's close to something like 2.6% for this year. And I'm expecting this to be around 2.25 to 2.5% going forward for the next year. Okay. These are estimates.
Okay. Mr. Ramakrishnan, the bigger worry is about growth. Where will that come from? Your loan growth is negative this time and your margins have fallen by about 25 basis points. Any guidance? Ultimately, it's only growth that can pull people out, right?
Correct. So again, Lata, this is on expected lines. See, we spelled about growth to be happening from products which are going to be less prone to delinquency. So we are going to be focusing on growth in retail, and I'm happy to say that gold, which has been a focus area for us, where we have grown by 20%, and in the retail, amongst the retail, we have grown a home book, which is better of the two compared to mortgages. So whichever we have grown in MSME, agri to the extent of 20% in agri and about 14% in MSME. So in all, we are growing in the areas where we wanted to grow, and corporate clearly, which we spelled out as not a good area for growth because we have seen delinquencies both in terms of concentration risk as well as in terms of the portfolio quality. There we are degrowing. So if you factor this degrowth of corporate and if you look at asset book overall, though it might still be showing a little bit of degrowth because, as you know, corporate book degrowth cannot be compensated with the growth in retail to the same extent, especially at this time when we are expecting market to be a little dicey. So we will be choosy in growing our portfolio, and we are focusing on areas which we believe are going to be good for the creating a good book in the long